Welcome to the Cover Your Assets podcast, a show for the physician who understands the importance of protecting everything you've worked so hard to achieve. If you're ready to find the peace of mind that only financial security can bring, let's get started. Here's your host, Billy Gwaltney.
Welcome to today's episode of the Cover Your Assets podcast. I'm your host, Billy Gwaltney, and as always, it's good to be with you. Excited to be here. Today, we're going to answer the question, what does the term guaranteed renewable only mean? I work with physicians across the country, helping them secure their private specialty disability coverage. It's usually deeply discounted. And the contract generally is what's called non-cancelable and guaranteed renewable, which is kind of the epitome of what you want your contract to be. In the insurance world, non-cancelable and guaranteed renewable means that the insurance company can never cancel the policy. Again, you can cancel at any time, but they cannot. They cannot change the definitions and they cannot increase the rate. Now, one of the top insurance carriers in certain states still offers what's called a guaranteed renewable only contract that has a significant cost savings to it, usually in the 15% range, that is at least worth knowing about, because guaranteed renewable only means, first, it means that the insurance company cannot cancel the policy. Again, you can, they can't. They can never change the definitions, but they could increase the rate by occupation class by state. Okay. So there's a trade-off. They'll give you an extra discount, usually 15% more than the discount. So if you've got a 20% trainee discount, then the guaranteed renewable only rate might be a 35% total discount. Okay. So no other way you're going to get a 35% discount. So at least maybe worth exploring, where if your occupation class, whatever occupation you're in, whether it's surgical or non-surgical or somewhere in the middle from a rate standpoint, if the insurance company has bad claims experience with that occupation class, they can petition the Department of Insurance in the state you bought the policy in, not the state you necessarily live in now, but the state where you bought the policy, to raise the rate for everyone in that occupation class. Okay. So they cannot single you out. They're not checking your medical records or somehow through AI or some other way finding out if you're less healthy now than you were 5 years ago. That's not what this is. All it is that if the insurance company mispriced the policy and needs to increase the rate, if you have the guaranteed renewable only rate, you've been getting an additional discount, you'll probably lose that discount. There's technically no cap for how high they can raise the rate, but this is not a mortgage, okay? So it's important to remember that if they raise the rate, if an insurance company raises the rate, a concept called adverse selection kicks in, which is where healthy policyholders are going to leave and go find the cheaper policy. And the less healthy policyholders, the ones who might have caused the issue to begin with, are not going to leave. They're going to pay whatever the price is because they know they can't get better insurance elsewhere. So it actually can make the insurance company's problem worse. The solution can be worse than the problem ever was. The insurance company that offers this of the top four is actually a company called Emeritus. They have never raised the rate in the, 70 plus years they've been offering policies. I know it's over 70 years. I'm pretty sure it's over 70. It might be 68 or 69 or 70, but I think it's over 70 years. They've never tried to raise the rate in any state. If they did, they would have to get regulatory approval for it. It's a red tape nightmare. I've talked to the actuaries there at that company about this, and they've said they've never really contemplated raising the rate in any state. They really do know what they're doing from a pricing standpoint. So it's just something you ought to think about. Now, there are certain carriers that if you, from a medical screening standpoint, cannot get one of the top four carriers and you go get coverage with an insurance company like Assurity or Fidelity that would offer like a 5-year benefit, and there are companies that specialize with policyholders that have medical history. Most of their contracts are guaranteed renewable only, which means they can raise the rate by occupation class. They're generally stable, and there's really no other option in that scenario with significant medical history. So it's still worth getting the insurance. But your situation may be unique or different. If you have particular questions about your situation, I would be happy to schedule a call with you and go over that. I just wanted to provide some general information on what does it mean to have a guaranteed renewable only policy And is it worth it to consider? And a lot of times it is worth at least looking at it if you're with the right insurance company. A truly independent broker can walk you through that. The devil's in the details, so you definitely want to make sure those details are covered accurately. If I can help, reach out, text me at 704-270-2376. We'd be happy to schedule a time to talk with you. Again, text me 704-270-2376. As always, grateful for your time. See you next time.
Thanks for listening to the Cover Your Assets podcast, a Work P2P production. New episodes drop every 2 weeks. If you've enjoyed the conversation, subscribe, rate, and review this podcast. For more tips and advice, visit the website and YouTube channel. Check the show notes for links. Join us next time for another episode dedicated to helping physicians like you get your disability insurance right and protect your way of life.